Hi everyone, today we'll be going over accounts, February-March 2021, paper 3-2, question number 6. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 6 is a part of section B, which deals with cost and management accounting. Now, without any further delay, let's get started. F Limited manufactures and sells one product. The sales budget for F Limited for the 5 months to 31st August 2021 is as follows. Okay, and we're also told that at all times F Limited expects the finished goods inventory to be 15% of the following month's sales. So what this means is that for April, our closing inventory is just going to be 15% of the sales made in May. And similarly for May, the closing inventory will be 15% of the sales made in June. Now, for the first part of this question, we need to state two benefits of preparing budgets. So the very first one is that it helps in the management control of business activities. Let's write it down. So management control of business activities. And secondly, budgets could motivate the departments to meet their targets. So that's motivating departments. Okay, this concludes the first part of this question. We can now move towards the second one. We now need to prepare the production budget for each of the months from April to June. So that is just going to be for April, May, and June. Okay, since we are talking about production budget, we just need to figure out the total number of units to be produced for each of the months of April, May, and June. And we know that we have the information regarding closing inventory, which means that we automatically have the information regarding opening inventory, and we are given the number of units to be sold each month. So our budget would look like this. We'll start with our closing inventory, right? Because closing inventories for the month of April would be produced in that particular month. So this value is added to the production number of units, right? And the second one would be sales as well, because some parts of the sold goods would be produced in this particular month, but the parts that won't be made in this particular month would be our opening inventory, which would have been made in the previous month. So we're just going to subtract the opening inventory. Okay, and this will give our units to be produced each month. Now, the most simplest one would be the sales. So let's just substitute the values for the sold units in the month of April, May, and June. We can see that it was 2,400, 2,600, and 3,000 respectively for the 3 months. Let's write it down. So that's going to be 2,400, 2,600, and 3,000. Okay, now we need to figure out the closing inventories for these months, and we were given the information that 15% of the following month's sales would be the closing inventory for this month. So in case of April, our closing inventory would be 15% of the sales made in next month, which is 2,600 times 15%, which we can write down as 0.15, and this results in the value of 390. Now we repeat the same process for the month of May and June. For May, the closing inventory is going to be 15% of the sales units in June. That's 3,000 times 15%, which gives the value of 450. And for June, that will be 15% of the sales made in July. So that's 2,800 times 15%, which results in the value of 420. Now let's record these three values as our closing inventory for the month of April, May, and June. Okay, so that's 390 for April, 450 for May, and 420 for June. Now, opening inventory, we know that the closing inventory of last month would act as the opening inventory of this month. So in case of May, April's closing inventory will be its opening inventory. So that's 390. Similarly, for the month of June, the opening inventory will be equal to the closing inventory for the month of May. So that's going to be 450. Now, for the month of April, it will be the closing inventory for the month of March, right? And we haven't figured it out yet. So let's have a look above at the given information. We know that the finished goods inventory will be 15% of the following month's sales. So if we're talking about the month of March, the closing inventory will be 15% for the sales made in April. So that's going to be 2400 times 0.15, which gives the value of 360. So let's record this value in our statement. That's 360. And remember that we are subtracting the opening inventory, so I'm just going to record these in a bracket. Okay, now we can easily figure out the units to be produced for each of the months from April to June. For April, that's going to be the sum of these three values, 390 plus 2400 minus 360, which results in the value of 2430. For the month of May, that's the sum of these three values, 450 plus 2600 minus 390, which results in the value of 2660. For the month of June, that will be the sum of these three amounts, 420 plus 3000 minus 450, which results in the value of 2970. Okay, this concludes the second part of this question. Now we can move towards the third one. We are given additional information. Each unit of product requires 2 kilos of raw materials, and materials are purchased 1 month before they are used for production. 50% of purchases for the month are paid in the month of purchase in order to receive a 5% cash discount, and the remaining 50% are paid in the following month. And the cost of raw materials is expected to be $8 per kilo. Now for the third part of this question, we need to prepare the purchases budget for each of the months from April to June. Okay, so that's April, May, and June. Now what we are told is that materials are purchased 1 month before they are used for production. So for the units produced in the month of May, the raw materials will already be purchased in the month of April. Okay, so we will start our budget with the production of following month. Now we will just copy our production units from the above budget. And we know that for May, we figured it out to be 2660, which will now be placed under the month of April. And for June, it was 2970, which will now be placed under the month of May. Let's write it down. So that's 2660 for April and 2970 for May. Whereas for June, it would have been the production unit for the month of July, which you have not yet figured out. So I'm just going to write down the closing inventory, sales, and the opening inventory for the month of July. And we know that the closing inventory for the month of June will act as the opening inventory for July. So our 420 goes here. Okay, let's write down our sales value and the closing inventory value. We have the sales value for July to be 2800. Let's write it down. And the closing inventory will be 15% of the sales for next month, which is August. So that is just going to be 2500 times 0.15, which results in the value of 375. Let's write it down. Okay, so that's going to be 375. Now we can easily figure out the units to be produced in the month of July. That will be 375 plus 2800 minus 420, which gives the value of 2755. Now for these units produced in the month of July, the raw materials will already be purchased in the month of June. So we're going to write down this number for the month of June. That's 2755. Okay, and we are also told that each unit of products require 2 kilos of raw materials, right? So we just have to multiply that 2 to the number of units for each of these 3 months. So I'm just going to write down the kilos per unit. That will be 2 for all 3 months. And we are also told that the cost of raw materials is expected to be $8 per kilo. So I'm just going to write it down as well. That's going to be cost per kilo, which will be $8 for all 3 months. Okay, now we can easily figure out the value for purchases. And that will be the product of production of following month, kilos per unit, and the cost per kilo. So for April, that will be 2660 times 2 times 8, which results in the value of 42,560. For the month of May, that's the product of 2970 times 2 times 8, which results in the value of 47,520. And for the month of June, that's 2755 times 2 times 8, which results in the value of 44,080. Okay, this concludes the third part of this question. We can now move towards the fourth one. We now need to calculate the amount to be paid for purchases for each of the months from April to June. Okay, so that will be April, May, and June. And we are only talking about the amount to be paid for purchases. Okay, let's have a look at the above information. We were told that 50% of purchases for the month are paid in the month of purchase. So we need to include the value of 50% of these purchases for the months of April, May, and June. But we are also told that we will receive a 5% cash discount. So if we receive a 5% cash discount, that means that we only need to pay for 95% of those materials, right? So let's figure out 50% of these values and 95% of the subsequent values. For the month of April, that is going to be 42,560, which is the total purchases, and we know that only 50% of it will be paid in the month of April. So that's times 0.50, and we know that only 95% of this amount will be paid since we are receiving 5% of it as a cash discount, so that's times 0.95. Now this gives the value of 20,216. So this is the amount which is paid in the month of April corresponding to the purchases made in that particular month. I'm just going to write it down. So that will be 50% of purchase with 5% cash discount. And for the month of April, we just figured it out to be 20,216. For the month of May, that will be the total of 47,520, which we figured out above. And we're only paying 50% of it, so that's times 0.50, and we're only paying 95% of this, so that's times 0.95, which results in the value of 22,572. Let's write it down. And now for the month of June, we have the total purchases of 44,080. And we only pay 50% of this, and we only pay 95% of this amount. So that's 0.95, which results in the value of 20,938. Now again, let's have a look at our information. We were told that the remaining 50% are paid in the following month. Okay, so if we are talking about the remaining 50% for the month of April, it will be paid in the month of May. Let's figure it out. So that's 42,560 times 50%, which you can write down as 0.50. And this results in the amount of 21,280. And this is the amount to be paid in the month of May, corresponding to the purchases made in the month of April. Let's write it down. That is 50% of last month's purchase. So for May, we figured it out to be 21,280. Now, for the 50% of purchases made in May, it will be paid in the month of June. Let's figure it out. That's 47,520 times 0.50, which results in the value of 23,760. Let's record this. Now for the month of April, the previous month would be March, right? So we will be paying 50% of the total purchases for the month of March. So I'm just going to create a statement in order to figure out the purchases for March. We obviously start with the production of following month, which is the month of April, which we already figured out above. Here for April, that's 2,430. I'm just going to copy this amount. And we know that the kilos per unit is same for all months, so that's going to be 2, and the cost per kilo is also going to remain same, so that's 8. Now this gives the total purchases for the month of March to be 2,430 times 2 times 8, which results in the value of 38,880. Now for 50% of the purchases made in March, that 50% amount will be paid in April. Let's figure it out. That's 38,880 times 0.50, which results in the value of 19,440. Let's record this. That's 19,440. This should be here below. So that's 21,280, and for June, that's 23,760. Okay, so this gives the total amount paid to the suppliers for purchases. That's going to be total purchases paid for. In the month of April, that's going to be the sum of 20,216 and 19,440, which results in 39,656. For the month of May, that's 22,572 plus 21,280, which results in the value of 43,852. And for the month of June, that's the sum of 20,938 and 23,760, which results in the value of 44,698. This concludes the fourth part of this question. We can now move towards the fifth one. We're given additional information. The product is sold at $40 per unit. In late May 2021, F Limited is expected to receive an extra order from a long-term customer for 300 units to be delivered by the end of June 2021. However, F Limited will be at its maximum production capacity in June 2021. To fulfill the order, F Limited would have to purchase these units from an outside supplier at a cost of $38 per unit. Now we need to advise whether or not F Limited should accept the order and purchase 300 units from an outside supplier. So we know that F Limited is at its maximum production capacity, and unless it buys from an outside supplier, it won't be able to sustain the order for a long-term customer. So by purchasing these units from an outside supplier, they would be able to maintain the relationship with the long-term customer. Let's write it down. Maintain the relationship with the long-term customer. Secondly, we know that the cost of purchasing from outside supplier is 38, and we know that our selling price is 40, so we can still get a profit, right? And that profit will be the difference. So that's 40 minus 38, which results in 2. So F Limited can still make a profit of 2 on each product. Let's write it down. F Limited can still make a profit of 2 each. And remember that we are sustaining that particular order by purchasing from an outside supplier. So whenever we're talking about outside supplier, we do not know whether the quality will be maintained. So that is still a question. Quality is not assured. And similarly, we do not know whether the supplier will be able to deliver on time, right? That is still a question. Delivery time is not assured. Now, based on these factors, we need to advise whether or not F Limited should accept the order and purchase 300 units from an outside supplier. So in this case, if we do not accept their order, we could lose our long-term client, right? And we do not want to lose any customer. That would be a huge loss to any business. So I would suggest that maybe F Limited should trust the outside supplier to maintain the quality as well as the delivery time and accept the order. Let's write down our decision clearly. F Limited should accept the order. Alright, this concludes the fifth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.